Good morning, everyone, on this snowy day. Breaking news, however, in terms of inflation, the U.S. CPI inflation reading for January came out higher and hotter than estimated, coming in at a 3.1% year-over-year increase compared to the 2.9% economists estimated. And then core CPI, which is CPI minus volatile food and energy, came in at 3.9% compared to the 3.7% economists estimated. Month over month for both regular CPI and core CPI came out hotter than estimated. CPI was 0.3% month over month compared to 0.2%, and then core CPI month over month was 0.4% compared to 0.3%. This is honestly leading for the market to decline right now. And I was saying that the market was starting to get a little bit overbought, at least in the short term. There was too much exuberance about inflation easing and a soft landing happening. With this in mind, I still expect a 5 to 7% pullback in profit taking, just because look, this report could be a one-off, but if we see a couple more higher than expected inflation readings, this might decrease the chances of a rate cut this year. This higher than expected January reading is already decreasing the chances of a May cut even. So if we see another hotter than expected reading, it will probably push back expectations of future rate cuts, which will likely dampen the market's enthusiasm in the short term. But either way, I still expect a 5 to 7% pullback. I'm not sure if this is the exact catalyst. Small and mid cap growth stocks, I think, will do better. But I think the market was going a little bit too far too quickly, and is just ripe for a little bit of profit taking, which would be healthy in the long term. Yesterday, we had Bitcoin hit 50,000. We had NVIDIA surge and surpass Amazon's market cap briefly. But I think, and I didn't expect this either. I didn't expect the January inflation reading to be this hot. There's a lot of narratives out there that it was going to be cooler than estimated, and would have shown a glide path closer to that 2% level. Which would have obviously been nice, but either way, the markets are reacting to this negatively. And JP Morgan said yesterday if the core CPI inflation was between 0.3 and 0.4%, the market should decline about 1.5%. So honestly, this will likely be the case. They said that at least for today, that'll likely be the case. Obviously, we have to see what happens. But I just think the market was getting a little bit too ahead of themselves in terms of expecting inflation to go down as quickly. Unfortunately, rates may have to stay higher for longer, which was the narrative from last year. We might have to keep on hold for a little bit higher for longer. And the markets don't really like that. 10-year bond yields just hit about 4.2%, which is the highest level of 2024. But either way, let's see how the markets react to this news throughout the day. But I think the market is ripe for some short-term profit taking, and this might be the catalyst of that.